Man, there are a whole lot of love coming in from every angle. Like I can see so many people coming in. All right, so like I was saying, yeah. So we have the stop loss orders, we have take profit orders, we have trailing stop orders. Okay. So there are two here that works together. You see this trail stop, you see this guy here, this trail stop and this stop loss order, they are the same thing. Okay. Now, what this one does for you is the same function. You're not going to see a trail stop differently on your platform. No, it's your stop loss order that you use in trailing your stop. Okay, so you use this guy here to achieve this one. Okay, so now how do you go about it? Your stop loss order is an instruction to close a trade at a specific price to limit potential losses. It's it is placed below the current price for a buy order or above for a sell order. Stop loss order help trader protect their capital by automatically closing a trade if the market moves against them. Okay. For instance, uh, if the market moves against them, let me mute all of those people. Yeah. All right. So welcome. This is the last section for tonight, and we're just trying as much as possible to cover through our cost guide for today. Okay, so like I was saying, yeah, stop loss order help traders protect their capitals by automatically closing a trade if the market moves against you. Now, there are times in the market where we have, yeah, a high influx of volume. Now, those periods are period during volatile news events. Now, if you're looking at this guy here, okay, this is a buy. Okay, this move you are seeing here. Okay, when we get to candlestick, I will be explaining in detail all these things you are seeing here. Okay, so this move before price got to this level. Okay, but what happened? It came back down. Okay, don't get confused about all these things you are seeing here. They are very easy to understand if you are very patient enough and you are attentive. Okay, you will understand them without stress. Trust me. Okay, so this price was actually moving like this up, and then all of a sudden it came back down. And then if you don't have a stop loss, let's say you are looking to buy upon a retracement of this level, and then you don't have a stop loss. Okay, you don't have a stop loss, and let's say it's open. Okay, your stop loss level is open. All right, though there are sometimes it will be in your favor, but most of the time it's going to go against you. Trust me. Okay, and let's say you are targeting a 1:1 on an average. Okay, on an average, let's say you are going for, let's say you are risking $10 to make $10. That is what 1:1 simply means. Okay, you are risking $10 to make $10. Okay, so now you don't have a stop loss, and now price is going in your direction. All of a sudden price reverses, and then you see here you get stopped out. Meanwhile, with a stop loss, or even without a stop loss here, remember, price can still be dropping in your direction. And let's just say your money is small, okay, you over leverage, and then what you can actually afford to lose is something within this area here, or even within this area here. But because you don't have a stop loss, you are going to lose this much. Okay, even this much. Yeah, sometimes it's even going to be worse than this. Okay, price may reverse and never come back. Okay, and never come back to a particular position. Okay, even if we're going to look at the daily time frame, yeah, even if we're going to look at the daily time frame, let's say you are trying to sell the market from this point here. Okay, let me clear all this so that it's going to be clear. Let's say you're trying to sell from this point here. Okay, and then you don't have a stop loss, you know that you'd have been in about 762 pips drawdown on an average account of 0.01 standard 0.01 lot size. That is about 0.01, that's about $76 or thereabout. Okay, so these are the reason why you need to have a protective stop. Okay, Now, in a situation whereby you didn't see this move coming, okay, and then you have your stop loss just slightly above here, you can reduce your risk to about 142 rather than what 700 or 800 pips, as the case may be. Okay, so you can see the importance of having a stop loss. And then when you have a stop loss and then you take your loss, you can have another opportunity to join the main trend if you recognize it early, and then have another entry and make good profit for yourself. Okay, so these are things you need to understand. The market is not a do or die affair. It's not that if you want the market to sell, the market must sell. No, you don't have that facility. You can't do that on this market. The market will take your money for vanishing. Okay, that's just one thing you need to understand. The market is a respecter of no one. No matter how big you feel your portfolio is, the market can liquidate you in 10 seconds. Trust me, it takes one rubbish trade to close down your account. Okay, it takes one trade to just knock you out. Okay, so you just have to be very, very protective of what you have. And as a trader, your major goal as a trader is to protect your capital first. Don't fucking think about making profits if you cannot secure your capital. Your goal as a trader, first thing first, is to be a good risk manager. Okay, if you don't know how to manage risks, I can give you this offer now, right now. Okay, if you're not willing to manage risks in this market, I can give you this offer right now to close down your phone, leave this Zoom section, and go and learn how to sell sugarcane. Okay, go and learn how to sell sugarcane. All right, that way you are going to not manage your risk. Okay, so if you are not interested in managing risk, trading is not for you. Okay, because you'll be frustrated, you will doubt yourself, you even doubt the creation of God, you will doubt everything doubtable, you will doubt if you are truly who you are, you will identify as something different. Forex trading will mess you up if you don't manage risk. Okay, even we that still manages risk, forex trading are still fucks us up every single day. Okay, but we still know our way out. Okay, due to experience, due to consistency. Okay, these are things. The market is not a bed of roses. It's not somewhere you come and then you place trade, then you expect every single time it's going to go in your favor. No, you don't have the facility for that. Okay, so yeah, so moving on. The stop loss order, like I said, helps you to manage risks. Take profit order, on the other end, is where you look to take your profit. Okay, now let's give you a situation of someone not having a good take profit level. Let's say you have this good buy from this place here. You be like, damn, man, guy, I go chop this market for 1:5. You understand me? Or this is 1:5 risk to reward ratio. Or I will eat this market when the market gets to this level. Okay. Now, as a trader, yeah, I will advise, when you see opportunity to take profit, take the profits. The market is not your father. Okay. Take that profit, secure it. You cannot lose an account when you secure profit. You cannot blow an account when you are closing in profit. No. The only way you blow an account is when you are closing in losses. Okay, that way you are going to liquidate your account easily. So now let's say, for instance, now you are looking for a 1:5 risk to reward ratio. Rather, this market gave a 1:3. Okay, ideally, I would advise, look for a risk to reward ratio of 1:2, 1:2, 1:3. Okay, is the consistency that matters. Forget about the high risk to reward ratio. There are sometimes you are looking for 1:2, but at the end of the day, you may end up getting 1:13. It has happened to me over and over again. Okay, so you need to protect yourself first. Okay, as a forex trader, protect yourself first before seeking for potential profits. These are traps that many traders fall into. Okay, let's say you are looking for 1:5, okay, or 1:6. Now the market gave you a 1:3, but or even 1:3.5. but you didn't take your profit. Why? Because this is where your eye is. Ojú kòkòrò yapa ti jáde. All right, so this is where your eyes is. Okay, now what happened all of a sudden? Now that's when you hear, oh my God, and this market moved in my direction. Ah God, I did not close my profit. My village people is after me. Nobody, no, your village people don't even know that you even open a trade. If your village people have mind, let them come and enter Forex market. They will run. Your village people will now be calling another village people that another village people is doing me. Do you understand? So all these things are things that trader encounter in the Forex market. Okay. Now you can have a good winning system, but if you don't know how to secure in profit, that winning system can turn to a losing system. Okay. You can have a good win rate, 80%, 90%, but you are looking for an unrealistic expectation. Now, see, okay, now even if you are looking for 1:4, okay, 1:4, you can see the market very close to my TP, but the market did not give me my TP. All of a sudden, you get stopped out. Okay, that's our advice. 1:2, good. 1:3, perfect. If you have opportunity to ride the trend, that is where trail stopping comes in. You can trail your stop. Now, let me show you a typical example here. You can have an entry from here, and then you are looking for 1:2, right? Watch what happens. 1:2, price gives order field, your TP smash, price came back, you move your stop loss to this level here. Okay, this is where your new stop loss is. Let me, okay, now this is where your new stop loss is. Let me use this to follow price. Okay, this is where your new stop loss is. Price is moving. You still have, remember, you are targeting a 1:2, but at the end of the day, if you can hold on to this trade, you have a 1:7. Why? Because you can be moving your stop loss. Okay, you can be moving your stop loss in profit when opportunities are present. Okay, let's say at this point you get stopped out. Okay, why? Because you trailed your stop. Even you can even still trail your stop to this level here and then get stopped out somewhere around here. Okay, so now this price level here, this is normally on average you are looking for 1:2, but you can close out at what? 1:4. Do you understand me? So these are approaches that you can use in the Forex market. Small win can just turn to a big win. Okay, so instead of you looking for 1:6, okay, or 1:8, the market may not really give you, the market may just come very, very close to your 1:8 and then take you out. Okay, and then at the end of the day, you start crying that you were in a winning position, but the village people did nothing to you. All right, so moving on, it's very, very important that as traders you have a realistic expectation to lock in profits. Okay, so a take profit order is an instruction to close the trade at a specific price to secure potential profit. It is placed above the current market price for a buy or below for a sell order. Take profit order help traders lock in gains by automatically closing a trade when the market reaches specific price. For example, I just explained in the price chart, 80 USD, you can take profit at 0.7400. If the market reaches 0.7400, you take profit, your order will be triggered. Okay, so and it will close automatically. You don't need to be there. Okay, as long as you set your take profit level. Yeah, trail stopping is the same thing as breaking even. Okay, you can break even by moving your stop loss to your entry and even above. Okay, so these are good systems or good approach you can use in collecting money from the market. This Forex market is it all boils down to who can steal more in the market. How fast can you steal? Okay, how fast can you steal? Okay, there are some traders that are not that fast. They can be in a good position, they will see profit, but they cannot steal that profit and convert it to their own. If the money is not counting in your bank account, then you're not in business. Trust me. Okay, the money has to count in your bank account. Okay, so but it's going to take you a while. Okay, it's not going to be an overnight thing. Trust me, it's not going to, even after I finish this crash course, You take all this knowledge and go into the market and expect to make $1 million by Thursday evening by 4 p.m., you will crash. Okay, so I'm being very realistic with you. You will crash. All right, so it's something that you have to do consistently over a period of time. Okay, and then don't neglect small wins. Small wins make up big wins. Okay, there are certain things you need to do in the forex market. You see, small wins, big wins, small loss, big loss. You see, this guy here is your enemy. This big loss here is your enemy. It's nice to take small wins. It's nice to take big wins. Perfectly to take big wins. It's nice to take small losses. But the moment this is this guy here that blows accounts now. Is this guy, this big loss. That's what blows accounts. Okay. Now, even the small losses over time will compound to become a big loss. So you need to be very strategic when taking profits and also when taking losses. Okay. And now there are situations whereby you can close your trade and then the market will run times 2, times 3 in your direction. Okay, these are situations that messes with the psychologies of traders. Okay, so you need to trust your system, trust what you know, and it's not every time it's going to work, but the time it works, let it count. Okay, so let's move on. Now let's see trading platform. Okay, so now in section 1, explain popular trading platform. In this section, we'll be diving into the world of trading platform, which serves as the gateway to the forex market. We will explore some popular platform and discuss the benefit of using a demo account to enhance your trading skill. MetaTrader 4. MetaTrader 4 is a widely used platform in the forex market. It provides traders with a comprehensive suite of trading and features for analyzing markets, executing trades, and managing positions. MetaTrader 4 offers real-time price quotes, interactive charts, technical indicators, and user-friendly interface. It also supports the use of expert advisors, which are automated trading systems. Okay, for those of you that know me to an extent, you see, even today I even posted profit I made from the GU bot, okay, on my story. Okay, if you are not, your contact is not saved on my phone, after now you can send me a DM. I will save your contact so we can get acquainted to one another. Okay, so MT4 popularity is due to robustness, flexibility, and extensive community support. Okay, so with MetaTrader 4, you can have access to certain features, okay, which I just explained and listed right here. Okay, MetaTrader 5 is like the elder brother of MetaTrader 4. Okay, it has a more sophisticated trading interface. Okay, here they did some sweet things. Okay, MetaTrader 5 is the successor to MetaTrader 4 and offers enhanced features and capabilities. While MetaTrader 5 shares many similarities with MetaTrader 4, it introduces additional asset classes, including stock and commodities, making it a multi-asset platform. MetaTrader 5 provides advanced trading tools, improve charting capabilities, and enhance backtesting options. Traders can access a broader range of market and take advantage of more advanced trading functionalities. Okay, so I will advise you guys, go download the MetaTrader 4 or the MetaTrader 5, and then use your eyes to scan through the platform. You see the difference, the similarities, and yeah, you just see for yourself. Okay, you can't make those things up. It's so visible that you can't hide them. Okay, so yeah, let's see now. Trading view. Okay, now this is trading view here. This is the trading view platform. Okay, you can still connect it to your brokerage platform. Okay, you can connect it to your brokerage platform, but what I do here is what I just use it for chart analysis. Okay, I just use it to analyze my charts, and then on any analysis I see here, I go down to what my MetaTrader 4 and then execute my trade. Okay, so what I do here is just to come and analyze my trade. Okay, TradingView, a versatile trading platform. TradingView is a popular web-based platform that offers powerful charting and analysis tool. Okay, it provides real-time market data, customized chart, technical indicator, and drawing tools. TradingView also enables social trading, where traders can share ideas, analysis, and trading strategies with a community of traders. Okay, so all these things here are listed right here. So you can even set your trade alerts on TradingView. You can check the data window. You can check the open, high, low, close price. Okay, which we'll also be discussing when we get to candlesticks. You can check the exchanges. Okay, the different exchanges. You can check ideas from different traders. Okay, these are some of the ideas I shared a period of time where I shared ideas on my AUD setup, and then people commented. About 63 people viewed, one person commented, 2 people shared, and so these are things that actually go on the platform. Okay, so here messages, people can still send me messages here, and yeah, and these are other people's ideas. Okay, these are my own ideas I updated. These are other people's ideas. You can just, if you are interested in taking a particular trade, you can just check from the ideas of other people to see, are people really seeing what you are seeing? Okay, so this is let me see, XAU USD. Let me see if I can see. It's supposed to show up here, but it's not here. Okay, so you can just come here, check for those people you are following. This one was published 15th of May. This was 16th of May. Let me see the most recent. Okay, this was 19 hours ago. And then this was on BTC. Okay, so this person is giving analysis on based on the Elliott wave theory, second wave, first wave, second wave, third wave. Then this is the fifth wave where we are expecting price to expand. Okay, so these are people's ideas. You can just read through what the person feels is right, and then you can drop your comment in the comment section, and then that's just it. Okay, just to enhance the communities of traders. Okay, so yeah, so benefit of using a demo account. Okay, uh now if you want to familiarize yourself with the markets, you won't just rush and go and deposit. Anybody that is a beginner or that is coming in contact with Forex for the first time, or hasn't been in the market for quite a period of time, and you deposit, 70%, in fact 99% chances are there that you will blow that account. Okay, you are going to, what when I mean blow, you can, another word for blow is obloy, another word for obloy is vanishing, another word for vanishing is disappearing, another word for disappearing is, okay, so your money is going to leave you with as fast as the speed of light. You just be looking at your money, you will say, God, please calm down, please, you go down, but it's not going to go down. Okay, I can assure you that it's not going to, because I'll be at the other side collecting the money. All right, so you just have to be very, very careful, and that's why you need to practice on a demo account. Learning and skill development, all these things are done on a demo account. Okay, demo account enables trader experience, experiment with different strategy, test trading technique, and gain confidence without the fear of losing money. Okay, so a demo account is not your money, is a paper money. Okay, so you test, then you familiarize yourself with the market conditions. Okay, so market familiarization, the same thing. It helps trader explore different markets, observe price movement, practice analyze chart, and practice analyzing charts. This experience enhances their understanding of market dynamics and improve decision-making ability. Okay, so it's a risk-free environment. You're not paying anybody any dime to use the demo account. It's free. Okay, go ahead, get your demo account. If you don't have a demo account, I send the link in our WhatsApp platform. If you're not on the WhatsApp platform, do also send me a DM on IG at Dr_new FX, okay? So that you can also join the WhatsApp community, Dr_new FX. Okay, you can also drop a follow on IG, Dr_new FX. Okay, so this is my page. This is my personal page, Instagram, Dr_new FX. Okay, so this is my personal page, and then I also have a page for the academy itself. Okay, so this is my personal page, and then this is how it looks. Okay, so you can send me a message, and then we go from there. Okay, so yeah, so now we have strategy testing. Like I said, you can test your strategies, different strategies. You can test them on the demo account. Okay, so now let us quickly look into what charting. Okay, let's quickly look into charting. Okay, which is going to be part of the final stuff which we have for today. Okay, so after this section, we won't be joining back, which is we'll just wrap it up here. And then tomorrow we will have a fresh section, which is day 2. Okay, so I believe it's interesting already. Just drop 111 in the chat section so I know that you are following me. Okay, just drop 111 in the chat section so I know that you are following. Okay. 111 Shaya. I can see the hands. I can see the fire. The fire is going down. All right. So let's go into charting. Okay. In this subcategory, we'll delve into the fascinating world of Forex charting. We'll explore different type of charts, including the line chart, bar chart, candlestick charts. We'll also introduce basic chart patterns and their interpretation to help you analyze price movements effectively. Okay, the line chart is a simple visualization. Okay, a line chart is the most basic and straightforward type of Forex chart. Okay, they represent price data by connecting closing price over a specific period of time. Line chart provides a visual depiction of the overall price trend and can help identify key support and resistance levels. Uh, they are especially useful for long-term trend analysis and identifying major price reversal points. Okay, so let's see here. Now we say what? The line chart. Okay. Now this current chart you are seeing here, I have on my screen is the candlestick chart. Okay, I'm using the candlestick, the Japanese not anyhow candlestick. Okay, is the Japanese candlestick chart. Okay, so if you want to get your chart on TradingView platform, you can see I've identified selected ones I make use of. Okay, like the candlestick, the line, and then the Hagen Ash candle. Okay, so now this is the line chart. Okay, so now I'll be showing you why it's not perfectly ideal that you use the line chart. Okay, and then we'll see it here. We can't make this up. Okay, so now this is the way the line chart is. Okay, we just have about 10 more minutes and then we'll call it a day. Okay, so this is the way the line chart is. Okay, now all these areas here are areas of potential support or resistance. Okay, you can see price bounced here, came here, bounced here. Okay, now I wish time will permit, I would have showed you guys how I draw my support and resistance before, like when I say using support and resistance. Okay, because as a trader, one thing you need to understand is that you are in constant evolution. Okay, let me just show you guys how I do it initially. Okay, this is why normally I come to the line chart and then I go over to the weekly time frame, and then what I do on the weekly time frame is I identify turning points. Okay, this is a turning point here. I try as much as possible to connect them to one another. Okay, multiple touches. Okay, this if I change this over to the candlestick, this thing will touch definitely. Okay, just look at it here. Okay, it's going to touch. Okay, so here, so what I do is I come to the line charts, look for areas where price touch multiple times. Touch here, touch here, touch here, touch here, broke, touch here. Even if I convert it here, you can see it touch, touch, here, touch, touch, touch. Okay, so I just do this for different areas. Okay, I just identify those key levels. Okay, this is how I identify my key zones. Okay, what I'm interested in is multiple touches. Okay, multiple touches. I want it to touch here. Even this one to touch, this one to touch, this one touch, 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 and so on and so forth. Okay, so these are the way I identify key zones. I do them for different levels. Okay, and then when I switch back to the candlestick, they work perfectly well. Okay, they work perfectly. You can see here, price touch it, boom, bounces back to the upside, breaks, touches, bounces, bounce. So it works as support and resistance. Okay, before I decided to start using psychological levels as my areas of potential support and resistance. Okay, so these are evolutions that you as a trader, you too will experience. Okay, over time, there are things you will start off using now that over time you may not use them again, and there are things I started off using when I started trading. I still use them to today. Okay, so those are the things that work. Okay, when something doesn't work, you can either refine or dump. Okay, you refine them like this support and resistance level. I noticed that okay, psychological level works perfectly well. Why don't I use psychological level? Just convert this thing to whole number 50, and then I have the same results. You see, it's the same result. And then this one here, I convert it to a whole number. Instead of 0.928, I just convert it to either zeros or I convert it to 1. Okay, then I just convert it to 1. Okay, just convert it to 1. Boom. And then I have, no, this is not correct. What is the nearest number here? Okay, this is 9. So I just have to look for the nearest number. Um, 9300. Okay, which is 9300. Okay, so this is the nearest number, 9300. Okay, so all these things just works perfectly well. Once price comes here, just bounces and then just do the whole stuff. All right, so these are things you need to understand. All right, so this is the line charts, remember, and then they work as dynamic support and resistance. You can see the same charts, the same stuff you are seeing here, though I've already refined it to whole numbers, but you can still see how well they're actually holding on to price. Okay, so the next one will be what? The bar chart. Okay, the bar chart. And now I told you why you won't want to really be using the line chart. Now you can see here on the line chart, you can see here on the line chart that price didn't come to this line. Okay, you can see here on the line chart that price didn't come to this line. But if I switch this over to the candlestick chart, you can see that price even touched the line. So if you are using this bar chart and then you took a trade and then your stop loss is just above the body closure here, what will happen is that when price opens, you get stopped out even before price moves. Okay, so you need to understand this stuff about what the candlestick, the line charts rather. Okay, so let's see, we have the bar chart. Okay, the bar chart provides more detailed representation of price movement compared to the line chart. Each bar on the candle on the chart display the high, open, low, close price for a specific time period. Okay, so let's go over the same details the bar chart gives you, the same details the candlestick gives. Okay, so let's look for the bar chart. We come here, we see the bar. Okay, I don't often use it, so this is the way it's going to look like. Let me zoom in. This is the way it's going to look like. Okay, so now these green ones are bullish candles. Okay, bullish candles are candles that are going up. Okay, they are opening below and then they are closing above. And then bearish candles are the ones that are opening above and then closing below. Okay, and then you can see this wick, okay, or the shadows price. They give almost similar details to what we have on the candlestick. Okay, but this is not, it doesn't really give that graphic satisfaction when we look at it with our bare eyes. Okay, so if you are looking at these things, it's going to be very, very confusing for you, okay, compared to this. Okay, so it's very easy to follow through with this rather than with this. Okay, though they give the same information, but just so that your eyes will be happy seeing what it's seeing, we had to use the candlestick chart. Okay, so now what they do here is that they give account of the opening price, okay, for a bullish candlestick or for a bullish bar chart. We have the opening price below, and then we have the closing price above. So you see this dash that comes out from this, or this dash that came out from this side. Okay, let me, now you see this dash here. All this dash that you're seeing here. Okay, all this dash, because of time, I just want to quickly wrap up with candlestick. Okay, all this dash you are seeing here, this is the opening price, this is the low point, this is the high point, and then this is the closing price for a bullish candle. Then for a bearish candle, the price will open at the top, it went up, came down, and then closed at the bottom. Then the next one opened, came down, went up, closed at the top, then we have the bullish move. Okay, so now for the candlestick, the candlestick unveiling price patterns and sentiment. Okay, candlestick originated in Japan and have become widely popular amongst forex traders. Okay, each candlestick represents data of a specific time period. The body of the candlestick indicates the price range. Okay, indicates price range between the opening and the closing price, while the upper and the lower shadow slash wick represent the high and the low price. Okay, and candlestick provide valuable insight into price patterns such as bullish and bearish engulfing patterns, doji patterns, and more. They help traders gauge market sentiment and make informed trading decisions. Okay, so switching over to the candlestick. Okay, this is the candlestick here. Now, this is the same data that was represented on the Japanese, on the bar chart. Okay, so now price will open at this top here. Okay, will go up. Okay, which is the wick or the shadows. Okay, and then come down and then close below, which is for a bearish candlestick. And then for a bullish candlestick, price will open below, will give us the wick, the lower wick, push up, give us the upper wick, and then close above. Okay, as long as price is closing above, we are bullish. Okay, the moment price start closing below, we are bearish. Okay, here price opened here, went down, and then came back up to close above the opening price, which simply shows that we are bullish. Okay, so these informations are what the candlestick conveys to us, which gives us information about who is in control of the market. Now we have different type of candlestick patterns. We have the engulfing patterns, we have harami, which we'll also be discussing tomorrow. Anyway, thank you guys for joining today's section. I hope you guys loved it. And I'll see you guys in the chat section on WhatsApp. Okay, if you're not yet on WhatsApp, do all to chat me up.